Hey, it's Mack with PriceActionTradingSystem.com. It's Wednesday, it's April 1st. This will be our chart lesson for today. And in the end, I think it was just pretty much a range day today. And you can see we had a really nice rally and then a really nice sell off. But from that point on, but you can see prices are swinging both sides of the EMA consistently. That's a sure sign you've got a range. I was looking at this two-tiered channel working down until we broke here, and then I wasn't so sure anymore. I think it's still valid, but I believe there's a bigger two-tiered pattern with this being the midline um, as well. So, which one do you trade? You don't really know, unfortunately. Um, they're both valid. You can see they're both coming into play. They're both affecting prices. It looks like in the end that the one working up won out right here when you should have been looking for a retest of the lows, but you didn't get it. But by this time, really, you've got a range here, your highs and your lows, and you're better off playing that. So I think you were better off just to look at this as a range day, go with your shorter term trends, and go with what they're telling you. That's the bottom line. And there's pretty much short-term trends all the way until we got into the range here, and then we spent the rest of the afternoon in this range. So that's how I'm looking at it. This, if you if you'd have drawn these first two swings here and then caught this one, you might have wanted to take this long here. These you would have watched anyway, and that would have probably given you a little more incentive to take this one, which is basically just another bounce off that line as well. So, but you also had the midline on this one, and you can see prices closed above it. So you're looking for prices to come back up here. So you still had some other reasons to like this one, um, and so it didn't really matter. I don't think which if you saw one or the other or saw them both. I still think that they both get you to the same place. The only difference is you might have been more inclined to want to go long through here if you're looking at the up channel versus looking at the down channel. But when it looks like a range day like this, here's your overnight lows, here's your overnight highs, and everything's in between there, and we're swinging back and forth to both sides of the EMA. When that happens, you can pretty much treat it like you can pretty much go either direction. When prices are trending up, just go long. When they're trending down, go short. So, um, but I want to talk about one other thing too. This sell-off here. Notice there's a channel working up. You get an overshoot, you get a break, and we try to make a high and we can't, and it sells off. Well, notice this double top. Notice when prices shot down, they went right through the EMA and they kind of got underneath. Um, that's telling you that there's a reversal pattern going on here. So be real careful about going long. Make sure you got a good setup. And you pretty much got what you wanted here until you didn't get a new high here, and then you broke that little channel line. And a trader asked me about this right here, getting long. And this is exact, almost repeat pattern of yesterday afternoon. Remember when we were working up and it tried to get a retest here and it couldn't, and it sold off. And this is almost an exact repeat of that pattern. So, when patterns repeat on a daily chart from one day to the next, it's similar to when you see repeat patterns during the day that look alike. So keep that in mind. But the real key is there's no decent setup. There's not a good signal bar here. If you did take this when this next bar ended as a doji and an inside bar, well, that's telling you something else as well. So that's telling you, hey, something's going on, but you should have at least drawn that trend line just in case, especially when it came right there a couple of times, because you've got a double top over here, and you're making lower highs. So that's telling you something as well. So that's about the only thing you could have that would say, hey, don't get in there. Plus, when this sold off, we got through the EMA too quickly, and that's the first sign of a reversal. Usually you'll still make a retest attempt, but you may not get one. And then another trader sent me the question, about this same setup here, this same pattern where we had the break and didn't get the new high. And he was asking me, I've heard you say that the price action is never wrong, but since we didn't get a new high, wouldn't that make the price action wrong? And no, that's not the case at all. There's nothing in the rules that say that you're going to get a new high or a new low on the retest every single time. Most of the time you will, that's the bias, but you have to understand that nothing is written in stone in prices, and sometimes it just doesn't happen for whatever reason. The price action is always right, never argue with it. But no, price action does not follow the rules 100% of the time perfectly. It will probably 90% plus of the time. It will follow the rules almost to the T, but nothing's written in stone. So make sure you understand that because, I get that a lot. People are sitting around, keep trying to take longs looking for a retest, and they might even be still taking longs down here wondering what the heck happened. Don't argue with the price action. Go with what it tells you, and that's why we try to use our shorter term stuff in there as well. But there's lots of clues here. Prices swinging, excuse me, back and forth on both sides. It looked like we were probably going to sell off here. And once we started lower, I would have looked for a measured move. But the fact that this made this leg down and then made another leg all the way back up, made a perfect double top, that's telling you something right there. I mean, we barely ticked higher and it failed and sold off. That's a broad double top. And, prices should have, on a healthy downtrend, maybe got 50 to 70% of the back way and then turned down. But that didn't happen. But if you measure this leg and bring it over here, that's what you should have been looking for a measured move back down. And notice we didn't get it. But you'll notice that a lot with ranges. You don't always get measured moves in ranges. And so that's another clue. Hey, this may be a range day. And, you could have this two-tiered one pretty early. I had this one by 9 o'clock. After we had this first swing here anyway. And it fit nicely right here. And you can see it came into play, both sides. And where does it bounce? An equal distance away. And same thing here. You draw it off those first two swings. And it's bouncing right through there. It comes back and tests it again there. And if you get the measured moves, it works out pretty good. It doesn't fit exactly up here. There's no denying though that it comes into play here. Look where that's turning down and look where it's bouncing. And then it's testing it from the underside. So there's no doubt that they're both in play. But I think in the end you were better off to stay with the range rules. And ultimately, don't argue with the price action. When it starts going lower here, you got to go short, or you just got to sit tight and wait and see what happens. When you're not sure what is happening, if you hadn't heard me say this before, make sure you hear this. If you're not sure what's going on, if you're confused, or you don't know 100% or think you know 100% where prices are heading or what they're doing, don't trade. No trade is a good trade. It's better than a losing trade. And never forget that. No trade is 10 times better than a losing trade. And that's what happens. People get confused and they don't know what's going on. Then they guess and they're wrong. And then they guess the other way and they're wrong again. And they end up really getting themselves in a hole. So if you don't know what's going on, don't worry about it. Just sit tight. You might have to wait 30 minutes, an hour, and eventually it'll start trending up again like this, and then you know what to do again. So I hope that's clear, and I hope that answers some of your questions about, hopefully you understand that price action there's nothing written in stone in the markets, never is and never will be. Although we know the bias that's going to hold most of the times, it doesn't mean it will play out every single time. But people tend to get hung up on that. And I mean, if it did, we could write these rules and just trade away. That's why a machine or algorithm can't out trade people yet, because there's too many variables and there's nothing that's 100%. If we knew every time there was going to be a trend line break, you're guaranteed a new high, You just start buying anywhere down there and hold on until it came back. But that doesn't always happen. So I hope that's clear to you. Um, but it doesn't mean the price action was wrong. The price action is never wrong. But if you trade and you're wrong, you're going to lose money. So, but the price action is going to go where it's going to go regardless. I hope that's clear. I don't want to confuse anybody, but at the same time, I want to make it clear that you don't sit there and say I got to keep looking for longs or wait because we didn't get a retest. So make sure you understand that. But anyway, I'm going to back out a little bit here, talk about the trades, and wrap it up for today. This Friday will be Good Friday. Let me mention that before. I haven't even looked at the trading schedule for this week. I'm assuming everything will be normal up until Friday. And the market will probably close early Friday, or maybe it closes Thursday. I'll have to look. But just don't forget that Friday is Good Friday, and the markets will be dead most likely. All of your professional traders will not be trading. And if the market's open, and I won't be trading, I'm going to take the day off. I'm going to start. I mentioned it a couple of videos ago, but over the summer I'll probably take more Fridays off, and there'll probably be so any Friday you don't see a chart lesson, I probably took that Friday off. It's getting that time of year where the days get longer and school will be getting out, and I'll be taking some Fridays off. So, but anyway, I'm going to remove this bigger channel because I was not playing that today. I was playing the down channel, and then pretty much the range is what I was looking at the rest of the afternoon. And all you really needed up until probably right in here was the downtrend. Of course, that's late morning, but generally I try to be done by noon, and it's pretty much a range from there on. So, um, but let's talk about the trades. The first trade I saw was right here, and I went back and forth. This um, could almost be green. Notice that there's a new low, pullback first entry, pullback second entry. So when it broke above it was a failed second entry short. But notice how there's three matching highs right there, and dojis and a lot of overlap. Everything's kind of below the EMA. The odds are you're going to get a retest attempt even if you don't get one. So when you got this bullish bar, I like letting it break higher and then trying to use a limit order. And you could have gotten filled on a limit order here, a tick or so back into that bar. And so I like that one, figuring that you're going to get a retest attempt. But you probably would not have this midline right here. Notice that prices, there was that little gap right there. Prices closed and then opened, although they did tick back and fill it. So you can see that. So that's telling you there's probably something there. So you might have drawn that and drug it up to the top, and that would have helped you. But most people probably wouldn't see that yet. So this one is real close to being a green aggressive trade because it's not a perfect setup. But prices have moved down pretty far, and so you're buying the lows here, and there is support across there. I don't have a line there, but you can draw the line and see that there's support across there. You can see that, and so good place to enter if you're going to go long. Then it pulls back, and you get a this. You could almost treat this like a double top, and this is kind of congestion, so this is like a little breakout pullback. But notice the trend line right there. It's right off the trend line. And then it moves up and it finds resistance. This was actually acting as support a little bit. Now look, it's acting as resistance there. And this sells off pretty quick, pulls back, and you get a second leg down. So there are two legs down. So it could be tempting to go long, but you got to have a better setup bar than that. This is a lower high, notice how these highs are getting lower all the way down through here. And if you just draw that trend line off those first couple of swings there, you can see that it's acting as a resistance. And you should always draw that, even if you're not using it, you put it on there just to see what happens if you're not good at eyeballing it. So even if you're looking for a retest, because it may turn out that it holds and you don't get a retest just like you got here. So hope that's clear. But there's some other clues here. Notice when this sold off, how it went right through the EMA. That doesn't necessarily mean you're not going to get a um, retest of the high, but this is a reversal type pattern. Um, this is what a reversal looks like. You'll swing, and you'll have this big move, and the EMA barely comes into play. And then a lot of times you'll already have a double top in place before that happens, or you maybe already made a new high, and then it does that. But it did it before on the first break of the channel, um, and we did have the overshoot here, so that tells you may get a break. To be careful that there may be a break over here. So, um, but at this point, this is a little breakout pullback long. You could treat this like a double bottom, so this is almost like a failed second entry short. I'm guessing some people probably get trapped there. And again, you get a move up, and you figure you're going to get a new high here, but you don't. It turns down right there. Um, Breaks this little channel as well. You really had a break of this one here. Your first two swings are there. You really had a break of it here. Maybe it's a little lower there, like so, and that gives you that little gap right there and all. So I may not have it drawn 100% right, but it's close enough. Doesn't matter. You get the break, and you get a second attempt to go higher. That's a second entry long. But look at the signal bar. Terrible. Look at the fact that you're making lower highs all the way down through there. Even if you got tricked here into going long, which that's the whole idea, is to trick people and get them on the wrong side. But even if you did, when this bar ended as a doji, even though that's almost bullish, the fact that this was bullish and it traded all the way back again, that's not a good sign. It's inside. It couldn't break higher. This thing should have taken on off if it was going to go higher. And really, you don't expect that big of a correction after you've already had a correction looking for a retest. The fact that it's making lower highs. So when this ended, that was your clue. Get out of it. Don't wait to see what's going to be. Even if it goes higher, just let it go without you. Get out, just in case. And you could have gotten out with a tick or two, maybe 3 ticks there. And then guess what? It turns down. But when it turns down, that's one you want to go with because you've got people trapped. You don't know that it's going to do this, but you know it's going to be a nice little move, and you're going to get a trap and a quick, easy scalp. But this thing just keeps going. And it really doesn't even give you another chance to get in until way down here. And this has been moving down so long. It's so far away from the EMA, been away from the EMA. There's not a lot of room back to the low there. It's the low of the day is way down here, so that's a little bit promising. If you had this in place, which you should have by now, you should have got your measured move down here, and that would have given you a clue that you might have some more room. If you took this one, I would definitely use a limit order. If this bar, notice what this bar did though, it broke higher and turned and went down. So I liked it a little more for that reason. But I would have used a limit order, and it definitely would have come back, and you could have got filled all the way back within a tick or so of the high of that bar. And then it turned down. But it's just not a very good setup, even though it moved quickly and moved a good ways, and you could have had a nice trade there. It's a little bit aggressive. It really is. So you got to be careful with that one. And then, of course, it comes down here. It bounces where you would think it would bounce. And you get a second entry long here, and this one probably could be green too because that's a nice reversal bar. It's far away enough from the EMA. But lately, when you start to see these sell-offs, sometimes it just keeps going. So I just say, my feeling is it's probably not worth risking along there. See if you get your failed second entry short and your trap. So you don't get your second entry short till here. And this was tempting to go short, but you've already got your break, your new low, and you've got a possibility of it going high, higher, possible channel already with your first two swings. It's fitting off the top. So I think you're better to wait. And of course, you get that failed second entry short here, and it gives you a chance to go long. And it's also a second entry long for pull back, first entry, pull back, second entry. So not only is it a failed second entry short, which it's really not a failed second entry short because it would have worked, but it still didn't go very far, so you can treat it like one, and then it's a second entry long. So I like that one. Um, it's not a perfect setup bar, but that's a pretty good reversal bar that, it traded way down here and bounced right off the trend line. It is a trap. It is a second entry, counting going with the trend. And you're looking for prices to go to the other side anyway, most likely because they just bounced off the low. So I liked entering there. It got a little dicey, a little iffy, but you see the trend line held again. And so definitely enter there. And it actually pulls back again, but that's a first entry, not a very good signal bar. And if it would have broke lower here and turned up, I might have liked it there, but even then, you don't have much room to that trend channel line. You don't, it won't always go through like that and overshoot. So I think it's too risky. I didn't mark it, and then you get the same thing here, and this one wouldn't have worked. And that's what you're worried about here. Even though you got enough movement here, this is what usually happens. And now you got a double top. But notice what happened here. You overshot the trend channel. So what does that tell you? There's a good chance you're going to get a break now. And there's your break. And it bounces right off that midline for the most part there. You can see that midline working back and forth there. That's where I had it originally. I moved it up because of that little gap. Still close enough to, but the other way I had it, it actually originally closed above that line like so, because that's where it was originally. And you can see that fits pretty good there. It's fitting real nicely. And maybe the line's a little bit steeper than what I have it drawn, and that's a possibility too. But anyway, there's a chance to enter here. And there are two legs. There's one leg, correction, second leg, and the second leg's much bigger. But there's some reasons to consider going long there. I think it's a little bit aggressive. If you draw your trend line, there's another reason it kind of adds. If you use the closes, you could have it like that or like that. And let's just see how it fits the best. That probably would, yep, it looks pretty close right there. And you don't really get a close outside there, so that would be another deterrent from considering that and waiting on a second entry, but you never get it. But I think it's because it's the midline and we're pushing to the other side. So if there's reasons to take it and be a little aggressive, but that's why it's green. It's not a great setup. It's not even a great signal bar. So, but then it pulls back and it gives you another chance to enter. And at this point, I'd move this up a little bit. I want to say I moved it up to about right there because those closes right there. You still had your overshoot, but you got your closes inside. And you had a little more room here. But even if you didn't move that up, you've been overshooting it, so there's a chance you might overshoot it again. But I like that one. I mean, that's a big, huge move, and you're still not to the high up here, which is our objective. So even if it bounces off, it should probably keep working and stay above the EMA till it gets up here. But in this case, it just went right through. And notice too that this went lower and then broke and went out the high side, and that's why another reason I liked it, having your stop there when it broke lower and started turning up. And then it really gives you a second entry right there, but I don't think I would have entered that one. If you waited till that bar, now it's looking a little congestive, and there's a chance it could pull on back before it goes higher. But if you took it the way I originally showed it, I liked it. But I didn't like entering that second entry there because it's too close to a little double top. And I mean, you just can't argue with the price action, and that's just not a very good setup. So, and then you just kind of had to wait. It was unclear what was going on. You're looking for a short, but you need to wait on a second entry. You got one right there, but there's not a lot of room back to the EMA there, and and a lot of times you'll get that second push up like you did here, and then you never really get a second entry short here until way down here, and now you're down at the lows, so you don't want to go short there, and it finally pulls back and gives you. I mean, you can treat this like a second entry long that fails, but and there are two legs up. But it makes a lower high, and you figure, and that's your first break of this little channel, so you figure you're most likely going to get a chance to ride this back down to a retest or a new low, and you're looking for a retest on the bigger one too, so that's another thing to be thinking about. And this one takes off. I went back and forth about whether or not to make this one green. It probably could be green, probably should be green. The more I think about it, it's borderline, so I'm going to go ahead and make it green. And then this shoots down, makes a lower low, pulls back, tests the EMA. It's like a breakout pullback short from that little double bottom right across there. And I would have been looking, you get a measured move here, and I'd been looking for that measured move. And you can see we got it exactly to the tick. So that's another reason to like that one. But here's another thing about that one. But notice how it closed. It actually didn't close quite on its low, but then opened up. And that shows you how easily that thing could close up when it's real bearish or down. I mean, it just really depends on how the ticks work out. So even though sometimes that doesn't look like, that looks like a doji, it's a very bearish bar. Just like this one, this one's not as bullish. It's not as long, and it doesn't close as high up, but it's still more bullish than it is bearish. And that's another reason for that one to be green. But I hope that makes sense. So I like that one, thinking we're headed to make now we're headed to make a new low. But you may not have been able to get in that trade. You probably had to drop a limit order, or you would have been hoping it pulled back and filled you, and it could have, it probably would have, but who's to say? But then it bounces, and I don't think you want to go long there, even though we do have a break and a new low. I don't think you want to go long there. It's not a good setup. Look at all the overlap, a couple of dojis in there. It's real, it's not much room back to the EMA. But when you get the failed second entry short, and look how bullish that bar is. That bar is very bullish. Go long there. It was a little dicey, but it still worked out. And when it pulls back and confirms the trend line, those first two would be your trend line, and this confirms it. Look how bullish that one is. And you may not have got in that one. Again, it opens on its high, or closes on its high and opens on the next bar, and it doesn't back up. So you may not have got filled on that. If you did, and if you were in this one and you got this chance, I would have added on if you could get in it. I wouldn't chase it, but I would add on there if you could get in it with the limit order. Because a stop, you'd have to be real quick with your stop, and I don't think you'd have got in that. And then it pulls back and it gives you another second entry long, but again, that's not a very good setup bar. It's an inside bar. It's almost if you put those two bars together, it's just a doji. It's a one bar trading range, and in this case, a 2-bar trading range. But you do have your trend line here, but it did close outside, and you don't have a new high yet. So you might have considered adding in this one. And what you really might have done when this bar closed, and it closed real bullish, when it broke above, you might have put your limit order back here. And you notice how it comes back before it goes higher. And it's interesting that it does that, and it's not by accident, because a lot of people just weren't sure. And when it turned down and started heading back up again, and then they were convinced to get in. But I think it's too late to get in now. You've got your break. You could do like this right here, turn up and then turn down, and you don't have room to get out, and you've got your new high after your break. And notice too, I may have already talked about this, but notice your overshoot here, and what that lead to? An overshoot down here, or the break of your trend line. And I can show you that over and over. We talk about that all the time. But when it comes up here, and you've already pretty much, even though this went a little further, this is strong resistance. and it was acting as support over here, and it broke higher. And it just traps people up there, and you're looking for a reversal anyway. So where do you expect it's probably going to happen? And look at that big bearish bar. It's a huge bar, so you couldn't get in more than maybe right at the bottom, maybe one tick in with a limit order after it broke. But this thing takes off, and it's pretty. It's just looking real rangy now. And there's, if you want to play around with your midline, it's there somewhere, like so. You can see that, and off it goes, and it pulls back right here. I would definitely use a limit order here. And you could have gotten filled a couple of ticks in just to make sure you got enough room. You would have had this right here. Actually, that's probably where it should be. Um, so you got enough room there, but you want to make sure that you can get out before you get to those closes, or definitely those last lows. And but quick, easy move, and then it bounces again. So you know you got a range kind of deal going on there. And that got you into the 2 o'clock hour. I didn't mark anything after that. So uh, this day, most people would probably, I would think, consider this day to be a little bit harder. But if you were thinking, um, as I talked about earlier, this is more, even though the moves are pretty big, everything is still inside the overnight high and the overnight low. So that, and look how prices are on both sides of the EMA. It's a clear sign that you got some kind of range deal going on. So I think you were better off to look at it as a range and play your shorter term trend lines. But even them, it can be a little bit iffy. But that's because it is a range day, and sometimes the strong resistance or strong support overtakes the other pattern you're looking at, or the other trend, or the other range, or congestion, or whatever. And just remember, there's ranges within trends. There's trends within a range. There's smaller ranges within smaller trends. There's smaller trends within a bigger trend. Uh, and that's why price action works on every level, because there's something there. You can find these trends and ranges and um, congestion and all that at every single level. So anyway, we're over 30 minutes today. I'm going to wrap this one up. Hope you had a good trading day. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.